Welcome to the Daily Market Comment by Marios Hadjikyriacos. I'm Cristina Marujos, and thank you for joining us at xn.com. Stock markets have been among the main beneficiaries after the Fed laid the groundwork for near-term rate cuts, with the benchmark S&P 500 index closing at a fresh record high yesterday. Falling interest rates typically boost risky assets like equities, and optimism that the American and Chinese presidents can reach an agreement to restart sincere trade negotiations when they meet next week is likely adding fuel to this risk rally. What's more striking is that risky assets are rallying alongside safe havens, with gold soaring to fresh 6-year highs earlier today and the Swiss franc being by far the best performer in the FX market yesterday. Preliminary French and German PMIs for June have just been released and were broadly stronger than expected. While this uptick isn't enough to suggest the ECB won't roll out more stimulus, it's enough to cast some doubt on that prospect, which is a positive for the euro. Particularly considering that the Fed has essentially locked itself in for a July cut, implying that the near-term risks surrounding the euro-dollar may be tilted to the upside. The Tory leadership contest has reached the final two candidates, Boris Johnson and Foreign Secretary Jeremy Hunt. Now this race will be decided by the 160,000 Conservative Party members across the UK who have until late July to make their pick. In any case, in an environment of a falling US dollar, the outlook for the pound suddenly seems neutral for negative earlier. Black gold had a good run yesterday, with WTI crude gaining more than 5% as the demand outlook improved while the supply picture darkened. Speculation for more trade negotiations is easing concerns around global growth, while news that Iran shot down a U.S. drone added to the body of evidence that tensions are near a boiling point. Hence, the outlook for oil is improving, though perhaps for the wrong reasons. There's an OPEC meeting on July 1st, and expectations for an extension of the current production cuts could also help keep a bid under the precious liquid. This was today's Daily Market Comment at xm.com. Have a great weekend.